Only in the environment of an $85 billion media deal can a $4 billion crucial transaction in the brokerage arena seem like chump change. But at $4 billion, as I said, TD Ameritrade trying to scoop up Scottrade doesn't get, well, kind of the same billing. Maybe it should, because at least those in the retail brokerage community will be trading back and forth on all of this stuff. TD Ameritrade CEO and President Tim Hockey with us right now. Tim, very good to have you.
Thanks for having me.
Any issues to clear here to make this possible? There certainly are significant numbers for that media one.
Well, clearly we're a bit smaller of a deal, but yes, there are certainly regulatory hurdles that we have to get approval on. We expect that to happen sometime in 2017. We've modeled closing at the end of our fiscal year, which is about 11 months from now.
All right, you will be a retail brokerage juggernaut, the two of you together, offices all over the place, and now you're going to have some overlap. Will that mean also some layoffs?
Unfortunately, yes. These types of deals obviously rest a lot on synergies, and one of the attractive pieces of this deal is the amount of opportunity there are for expense synergies. So there will be, unfortunately, some layoffs, but we commit to be very thoughtful and fair and obviously generous for those people who get laid off.
You know, there are so many deals, Tim, not only yours with Scottrade, but British American Tobacco scooping up the rest of Reynolds American. It can get its hands on, obviously, the big media one I told you about. A host of others, you know, if you add them all up, $200 billion worth on the table or rumored to be on the table. What the heck is going on?
Well, I can't speak for every other industry, but I do believe that if you look back at some of the forces that are happening in the world today, whether it be low interest rate environments or relatively low growth rates, clearly what you see is an opportunity to drive for scale, and that is certainly applicable in the industry that I'm in.
All right. Now, is it also a sign of maybe an individual retail top that maybe the business wasn't and isn't there, and that a lot of players are going to have to consolidate because it's shrinking up a little bit? The individual zeal, never what it was back before the meltdown, has never really returned to the degree many thought it would.
Well, we certainly believe there's a lot of life in the retail and trader and investing space. That's clearly the space that we're in. But Roger Riney, the founder of Scottrade, who did an amazing job over the last 30-plus years building a fantastic franchise, thought about it long and hard, and he decided this was the right time to sell. Speaking about that scale point, by the way, he recognized that in order to invest in his business, you needed to be larger. And so one of the great opportunities with this acquisition is, in fact, that combined, we'll be able to offer some great cutting-edge technology, platforms, and capabilities to the Scottrade clients that Roger just didn't have the scale to invest in.
Well, you'll certainly have the scale now, but it does raise a question I kind of touched on the outset, that what has happened to that? Those days of you're the taxi cab guy buying internet stocks and day trading among so many fields. Yeah. Will we ever get back to that, or was that unhealthy to begin with, a sign of just overzealousness? How do you describe it?
Well, I think there's certainly ebbs and flows, as you know, in the marketplace, and people get more active over time and sometimes less. I don't think this is a structural shift. I think this is just cyclical. I mean, clearly when you see that markets are at this sort of high, what we've seen in the last quarter is just the sheer levels of volatilities have dropped down, both intraday and that's had an impact on the trading levels. It's one of the reasons why we, and now combined with Scottrade, want to branch out beyond just trading to obviously be able to supply more services along the long-term investing continuum. Yeah,
so stick with customers for the long haul, help them plan retirement,
exactly
etc.
Right.
Do you think, given the timing of a lot of these transactions, your own including, that maybe you strike while the iron's hot? Interest rates can only go up maybe sooner than we thought, maybe as soon as December, and that will continue a trend. And then you have a change of administrations, whether it's a Republican one or a Democratic one. Change is afoot. And then a lot of folks are saying, well, whatever we want to do, let's do it now. Now's the time to do it. What do you think?
Well, I wish that transactions came along and they were very thoughtfully timed, but frankly, you never really get to pick your timing. I'm all of 3 weeks into being CEO at TD Ameritrade, and so I would say the timing isn't perfect from my point of view, but clearly from Roger's point of view and the opportunity to participate in the consolidation of the industry, it was part of his decision to sell, and we're just happy that we were able to put the deal together to announce today.
He's done a lot of commercials. He's the face of that firm. Are you going to be the face of the new firm?
I don't think so.
You don't like commercials?
No, not so much.
Yeah. Okay. We'll see how that goes. Thank you very, very much. Congratulations.
Thank you. Thanks for having me.
All right.